Hey guys, Mike here. So, oh boy, here we are at the end of 2023 officially, the last day the market was open. And I did want to say for those who don't watch the Saturday's videos where I answer your questions and stuff and go over some comments, Happy New Year's. Hope you have a great time. Be safe, be careful, and welcome in 2024. All right. And so, reflecting for a minute, I just got to say, I don't know about you, but man, not just this year, but the period from 2020 to now, like what a roller coaster. I mean, maybe it's just me, but who knew the market go up when the world was shut down, right? We've seen a lot, right? And then crash in 2021, go back up in 2021, it crash in 2022. I mean, whew, and then rocket ship in 2023. And so 2024 is going to be interesting. So put in the bottom what you think is going to happen. Man, I think if we can get past the first quarter and economic data still isn't bad, could be a pretty good year. I think it's going to be a roller coaster, that's for sure. I think it's going to be a lot of volatility for sure. But I just think, again, the first quarter is going to show it all because we're going to start to see earnings flow in. We're going to see what the Fed's going to actually do since the market is just pricing in this perfect scenario of things happening. I'll address some of that in Saturday's video, by the way, talking about that. But, you look at 2023, the NASDAQ 100 up 54%. The Dow sitting at all-time highs. The NASDAQ Composite, which has a boatload of stocks, about 6.5%, which we'll look at from all-time highs. The S&P is sitting there at less than 1% from all-time highs. I mean the Dow Jones Transportation, what a remarkable recovery that was. And I don't know about you guys, but I've learned a lot. And everything I learn always goes in the Discord and my son's notes and members' videos, all that stuff. Is everything I just keep learning and learning and learning. Because, again, I'll talk about this tomorrow's video as well. But I started this channel for a reason, and it was strictly to learn as much as I could, put it out to the public, to try to get people off of CNBC and all these other crazy things and listen to hedge fund managers and, trying to make us sound like investing is like rocket science and you got to have a PhD to do it, or you got to go to a finance degree, or, what really moves the markets is this, that, and the other. It's like, come on, and so it's been a nice adventure. I appreciate all you guys who have been along for the ride and stuff. So, and 2024 is going to be another good year. That's kind of the way I feel about it. So, I did find to close out the year some interesting charts and some things that are going to happen in 2024, which is still mind-boggling. And why I don't think everybody actually is going to be this smooth ride, and I hope it turns out to be that way. But I don't think it's going to be as smooth as everybody tries to make it out to be. But when you look at this chart right here, this is the U.S. stocks versus all of the stocks throughout the world, right? Pretty much is what this is comparing here. And you can see this was the Nifty 50. I touched on this a little while back in a video I did. This is the dot-com bubble, and look at where we're at now. I mean, isn't that mind-boggling? What is that, almost 3 standard deviations out now? But, it's pretty simple. When you look at this, you'll go, wow, that looks like that's going to have to bust, and pop, and we're going to head down. And, yeah, you would think there's going to be some kind of, move down at some point in time. But the truth is, why has this happened? Like, why do you see this just massive explosion happening? And it started to really move in 2016, 17. Well, one is this right here, right? The Magnificent Seven, the weightings soar. I mean, that's the weightings. It was an index, right? I mean, these make up like 30-something% of the S&P now, almost half the NASDAQ 100. But the other two things are simple. The Japanese stock market has done what? Nothing, right? In like decades. I mean, it's moving back up, but it still hadn't reached its all-time high from like 2 decades ago. The Chinese stock market, they're all about real estate, but then they crushed their own companies starting in 2020, which made it even worse, right? But the other one is, what other country can you have trillion-dollar companies in, right? I mean, we're literally the most manipulated stock market there is, right? We're the only country where we'll say monopolies don't exist. Right? You see the European countries, they fight this all the time. Here, those companies just pay off politicians. They go, whatever, doesn't matter. Crush all the small businesses, right? And so you get these trillion-dollar companies, and there'll be probably 2 more joining the party this year. And so that's why. And it just shows you how much money flows in from around the globe into the U.S. stock market, okay? But it is amazing to see that chart and go, wow. And each time there is a reversion to the mean, right? I mean, you're 3 standard deviations out, something will happen. I mean, Maybe some of these other stock markets start taking off, India, all this other stuff. And we'll see what happens, but I just thought that was an amazing chart. And the other thing is going to be in bonds. Like, you know, people bullish on bonds, and I get why and everything, because if they do cut rates, it's going to be bullish. But man, the supply, does that not worry people? I mean, just look at this right here. This is 2024 coming up. The amount of bonds that are going to have to be issued from the government to support this debt. I don't have the greatest vision on the planet. I do wear glasses and everything, but that looks like a lot more to the right. And it's an amazing amount of debt they're gonna have to issue coming up this year because of they just keep spending like drunken sailors. Let me know what you think in the comments about that one. But people expect the bond prices are going to keep going up and the yields keep dropping. That should be the case. Now, again, is smart money still buying into this so far, this rally? And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. So far, yeah, we're still right here on the 4 hour. You got your bears and virgins on your RSI, but nothing really to write home about at this point in time. And again, this one's another one that's getting overstretched like everything else, well above the moving averages. But again, you see that 50 crossing right there? This trades like anything else. You see that 50 cross over the 200, and you see all those moving averages consolidate in one area. When you see that, there is an explosive move up, right? And this is HYG, so it doesn't move like a tech stock or anything for sure. But again, they're still buying. And when you look at what happened today, everybody's like, oh, it's red, they sold off. Really, you think? I mean, what was I talking about yesterday? I've been talking about like every video for like 2 weeks. Man, are we overstretched? Sure are. And so what'd you see? This was, I don't know if you want to call this tax loss harvesting at the last minute. Maybe people had some losses to write off with the gains or something. But it was those stocks that have gone up the most, the fintechs, the small tech stocks, travel, real estate has been through the roof, IBB, which is your biotech, right? Absolutely, sold down today, which is a good thing for most people. If you're looking to buy the dips and get back in, now will that continue coming in January? We'll have to see. But, when you look, it's like the smaller the better. I love this stock chart I found right here from All-Star Charts, and they put out on Twitter. And you can see the large cap versus mega cap. That's okay. Small cap versus, large cap, it's been pretty dang good. Then you look at micro cap versus small cap, and it's been even better for them. I mean, it's been an explosive move. And again, a lot of these companies are hot garbage, and going to do terrible as long as rates stay high. So if they don't cut, they're going to get decimated. But it's again, they've been so beat down that big money said, wow, we can really get a bang for our buck here. And most of those smaller companies are shorted up to your neck, right? And so that's why they've been moving like they've been moving. And I'll talk about this a little bit in tomorrow's video because somebody asked a question about this. Now, looking at the indexes, you can see the S&P here, right? Almost all-time highs, didn't want to push it through. Everybody thought it was going to just sell down 3% today. And it ended up almost like a V-shaped recovery almost. But it's got a ways to go if it tries to bounce down off that July high. And again, it's stretched well above that 200 now. It looks like the MACD wants to roll over, doesn't it, on that daily? I mean, RSI has been stretched. It don't really matter, I guess, at this point in time. Nobody's even looking at it, it seems like. Weekly, it's getting up there to overbought. Again, it seems like it's got some room to run, of course, no doubt about it. And remember, these things can stay up there in that area for a long time if it's a true, bull market type deal, right? And people start really just rolling in at the beginning of the year. But January and February are iffy. Okay, they're all over the place, 50-50 crapshoot. Okay, and when people are going to start doing a lot of selling for tax loss harvesting or trying to sell their gains, wanting to pay for another year and all this crazy mess. You look at the NASDAQ composite, holds a boatload of stocks, a lot more than the NASDAQ 100. It's like over 6% away, though, from its all-time highs, right? You can see the RSI, you see the MACD. Again, there's the weekly. It looks identical to the S&P on the weekly, right? But again, this one still has a ways to go if it wants to move up. And if you look at this moving average, it's not as far overstretched as the S&P is, it looks like at least. But, again, see what that is? That is a fair value gap. So let's see if it's able to mitigate that and power through it, or is it going to come up and then just sell back down a little bit, maybe consolidate, maybe even come back down. And that would be perfect for me on most of these, to come back to the July high, which I think is like a 3% drop on most of these indexes, and then bounce from there and turn it into support. That would be like a dream, honestly, if it would do that and stuff. But again, you got a lot of people calling for 20% crashes come January and February and all that good stuff. That would be very interesting, but it has been a weird 4 years. So the IWM, you know how I feel about this. Finally down about 1.5% today. It's been needing this. I still want it to come over and actually bounce off that trend line right there. But again, around 199.75, 200, somewhere in there. Watch that one because that is that July and those couple highs that we broke and stuff. But again, I'd love for this to kind of consolidate, come down, hit that trend line, and then try to power back up and let's go on the next rally. Again, that 50 is not crossed, but you see all the moving averages right there combined together, right? You get an explosive move when you see moving averages sitting there all in the same spot, whether it be up or down. And usually if the 50 is turning up, it's usually an upward movement, of course, but that's usually when you get a nice explosive move up. I think we even kind of trail back here, and I'll show you a few other times when that happens. If we do break the 199.75 area, whatever that area is, maybe even 198, then people will start talking about a trend reversal and things like that, setting lower highs and lower lows, that kind of stuff. You can see what I'm saying. When these moving averages meet, that's when you normally will get an explosive move. If the 50 is moving down, you get an explosive move down. If it's moving up, usually it's a nice move up. So let's keep an eye on that. Now Tesla, another red day today. I know a lot of people were dip buying on this one for sure. They were all over Twitter. Now I did forget to mention yesterday, and somebody called me out in the comments. I mentioned it 2 days ago. When we hit the trend line up here, this is the trend line that goes all the way back to all-time highs. Yes, yesterday it hit it. That's where we rejected off of, which is absolutely normal. Funny thing is I actually put it in the video and for some reason edited it out yesterday. I don't know why. So don't understand that one. But anyway, again, if you look at what we're drawing on here, below you will have a lot of confluence. If this thing continues to sell down, you will have that 4-hour fair value gap, those two trend lines right there. That was the wedge we were in before. The other one's coming from the bottom it made when I think it hit 100 or something like that. Maybe it was even, yeah, it was the one we hit the October when we started to move up. That's what that one is. You also have the 100 moving average in there. Here we are with that volume profile at the right. So you have a boatload of confluence sitting there. It looks like around 242. If it decides it wants to move down in that area, and then, I mean, there's going to be a bunch of money coming in right there. I bet money on it. But, again, is it going to get there? That's what I have to find out, because it's left behind a whole bunch of fair value gaps and everything else above it to draw from. Still, I think there's a lot of bullish bets on this one. A lot of dip buyers still coming in. You saw that today and buying it up. And I know people were buying it yesterday, like 250. And so, again, we'll see what happens on this one. Now, Palantir, I think this one's finally getting to that point where we're finally going to see it's at the apex somewhere where it's wedged in right here. And the 100 below it, that trend line right there, which goes back a ways, the X support is below it. If it breaks that, finally we move down into this RTH gap, which was created from that earnings explosion it had, right? And we finally get to go down to challenge $15, somewhere in that area. Or finally break above, get through the 50, and head back up. So that one will definitely have its time in the sun come next week. We're going to find out which way we're going. And that reminds me, I'll do Saturday's video. I will not do Sunday's video to set up the week because we're closed on Monday. I will do that Monday. So Monday night, we'll set up the week and finally, hopefully, be back with some volume because the volume has just been a disaster, really. And so I'll be glad when we're kind of back to normal, at least for the trading purposes of things. And really, you'll get to see like where they want to push this market, right? And I'm talking about I mean like the hedge funds and all that stuff. So that's really what I want to see and everything. So anyway, hope you guys have a wonderful weekend, a wonderful New Year's with your family. Down the bottom, put what's one of your major financial goals this year, right? To pay off your house, to learn something, whatever it is, right? I mean, please put that in the bottom and stuff. I'd love to see that. My goal, believe it or not, is a financial goal, but is to actually write an ebook, right? For everything I learned over the last 4 years, just piling into one ebook. That's what I want to do. So I'll be working on that. Never wrote a book in my life. If you happen to have any kind of advice, be more than willing to take it. Okay, so anyway, put it in the comments. Let me know. Again, have a wonderful, safe New Year's yourself, and I will see you tomorrow. And for those who don't watch tomorrow's video, I will see you in 2024. Have a good one.